What up, y'all? Back again with another video. Okay, it's your boy Jay, right? I don't even remember if I even introduced myself entirely, but yes, my name is Jay, Jay, and I trade, man. Um, I trade really well, and I like to teach people, pretty much. But my bad. I'm like trying to look for the lighter right now. I can't find it. Oh wait, I found it. But long story short, we're back again for part 4. All right. On our journey today, we're pretty much talking about like 3 important things. Okay. Notice how on my screen, we're talking about monthly charts, weekly charts, daily charts, and lower time frame charts. Okay. And so the thing about me is, right, I'm a very processive person. And what I mean by that, like, I don't even know if that really makes sense, right? Or the way you're supposed to say it. But I'm really good at noticing the same phenomenon and seeing things that are repetitive in nature, especially with trading, okay? And the thing about certain time frames is it really comes down to your personality. What type of trader do you want to be? You feel me? And that's my question before we even start this lecture, right? What's your personality style? Like, are you somebody with a lot of patience, or are you just like me where, like, I'm not gonna lie, y'all, you could tell, like, I'm really good at what I do, but I'm also very lazy. So, like, I find really, really high probability trades. I will sit down, I really just like to chill with my friends, you know what I mean? Smoke some weed and just kind of chill, watch the chart, and move on to the next one, you know? So, I can swing trade really well. I can day trade really well. I can scalp even better, right? And so that's what my personality style is. Since I'm a mentor, of course, it's in my nature to just learn how to do everything, kind of. And I'm technically kind of like a workaholic, but I don't make it feel like work because I love trading so much. Okay. My thing is, when you're looking at like a, you know, situation where you're trying to get like the most high probability, or you just want to be more comfortable in the chart in general, this is my question to you. When you're going in and you're trying to, figure out, buy or sell or up or down or whatever, are you taking time to really think like, yo, like, how long am I planning to be in this trade? Or am I comfortable normally with day trading? Should I just get in now or today? Ask yourself why. Is it because the market just opened on Monday and you really want to participate? A lot of people do. Or somebody told you about something, they're like, yo, you got to get in right now, bro. Like, you're going to miss the move, blah, blah, blah. And you get that FOMO. Next thing you know, your trade is down 50%. So my thing is here, right? Um, I get asked a lot of times where people are like, yo, what time frame are you trading on? Like, what time frame? Remember what I talked about with these last 2 videos, and we're going to use turtle soup and fair value gap as a big example, right? Especially for value gap because we're on part 2 of that. So my thing is, right, when you're a, you know, position trader, or are you trying to be a swing trader, or are you trying to be a day trader? It really depends on what time frame you want to operate on the most. But you're going to use all the time frames pretty much. I don't want you to come in the market thinking that like, okay, I can come in with a 5-minute time frame and just do everything I need to do. I mean, if you want to make it hard for yourself, sure. You can do what you want. You know what I mean? But like, my thing is, and especially with like a lot of my students, right? I'll be asking them, like I said before, like, yo, do you guys want more day trades or Do you want more swing trades? And a lot of people are more comfortable with swing trading just because, giving yourself more time to adjust to volatility and other things in the market, news, or other factors that might make you more comfortable just to hold to a target. You feel me? So let's take a look at some stuff. I'm on DXY. I'm on the monthly chart. And so a big thing is, right, we talked about a lot of my favorite concepts so far. Fair value gap being one of the greatest entry techniques of all time. We talked about how it's flexible in terms of application, right? With entry, giving you a target, giving you a premium, like really solid spot to participate from, and then also giving you a long term, even target if one's untagged, right? So this is pretty cool. I'm on the monthly, and you see how we have a perfect fair value gap. And the thing about this fair value gap is it's very clean, right? Very clean. Being on a monthly chart, obviously I'm not trying to position trade. That's not my style. So what I'm going to do is refine this to a lower time frame. So if I'm coming in, right, and I could take my arrow, I see how buy side and sell side liquidity is engineered above here, right? We have lower high right here also. But this is all taking place after this fair value gap has been respected and traded away from, right? So my thing is, and I want to challenge you to do the same thing when you get into the market, right? Or start to backtest this or whatever. Start to look for higher time frame structure and look for the same on a lower time frame structure, okay? See how you feel about it, all right? This is what I mean. And you might not even know yourself, and that's what might be the issue or the disconnect from you being, you know, I have all this knowledge and I've been on YouTube, I've been learning so much stuff, and support and resistance hasn't been working for me. This ICT stuff has been kind of cool. I'm starting to figure it out a little bit, right? And that's exactly how I felt when I'm going through the same process. And so all I'm doing is taking the same stuff that he's given us and giving it to you in a simpler way, like I said before. So all of these same concepts are fractal. That's my whole point. All of these things are fractal, and I gotta roll the next blunt. And damn, did I give her the last two blunts that I had in that pack? I might have, but it's all good. We'll get some more backwards. But my thing is right here, right? When you're trying to be a position trader, you're going to focus on the monthly chart. Okay. I want to go to like GU really quick. All right. When you're looking at the weekly chart, okay, and I told you guys this is what I personally like to do when I'm trading stocks or options, right? Or when I'm looking for really, really nice swings in either market. It could be Forex also. But when I'm looking for my swing trades, I'm mainly focused on the weekly chart, okay? And this is what's going to be so interesting for a lot of us because, again, we're in 2023. A lot of us that are younger don't really have that much patience, right? And we're interested in insane moves, though. And again, I'm sure you're the same way. That if you're in a position where you're like, yo, I have a chance to make X amount of money if I'm correct, right? Whatever. Or same thing, if you're on the downside, you're like, yo, I see something at the top of the structure and I really feel like, this is only a pullback. I might be able to sell this thing down. And I mean like in this area here. And look what happens. You got all these lows here. Price literally rains down on you. You feel what I'm saying? And when you get a good move like that, is that worth the swing? Sure. It's worth it. And again, we're on the weekly chart. This is multiple weeks. But my point to you is saying, like, if you want to figure out your personality style, you don't have to be a swing trader. You don't have to be a position trader. But you can still use the data from higher time frames to refine these to lower time frames. You feel me? So if I keep this just like this, right? And I know that on my weekly chart, price is bearish, right? If I go down to my 4 hour chart, that means if I'm bearish on the higher time frame, every time that I see price come up and make a significant, high, I'm going to be looking to participate on the downside. I know that I should be looking for lower prices for the next either couple days or couple weeks or whatever. You know what I mean? And honestly, everybody wants to say, well, like, I like trading reversals. So, like, okay, no problem. We talked about turtle soup. You can go on the market and find easy buy situation if you would like. You feel me? And I would do some sort of, stop loss in here. And again, not even hyper analyzing this exact structure. But my thing is here, why would you want to go upwards when you know the weekly is bearish? You're trying to swim upstream. You're going against the grain. You're going backcourt on the wrong side. You feel me? Not that you can't score on that basket, but if you're literally like, yo, we scoring on the left side right now, why are you going to the other side? That's going to be so much better for you if you try and see, okay, what is the high time frame doing? What am I comfortable with? So if you try swing trading, you're like, yo, I'm not comfortable with holding positions overnight. I can't sleep. I just don't feel comfortable leaving my money in a open trade overnight. That is totally understandable. I used to be the same way, especially when I wasn't so good at market structure, and I used to feel like, damn, well, like, if I wake up tomorrow and especially trading options, that shit is rough. That shit can be so rough if you're not comfortable with where your entry point is and where your target is. You feel me? Because first of all, theta can easily destroy you. Number two, stocks like the gap just because of the time frame of it being open and closed during a certain time of day, right? But this is also why I like Forex because a lot of people come into the market that really want to learn market structure. I teach you with Forex first because it's so easy to see during a 24-hour banking cycle how a daily candle might form or how to anticipate a longer term trend or how to anticipate a shorter run and how to get comfortable with that and routine that. And that's why we're here. You feel me? And again, not to sit there and dump information on you, right? But like I said before, when you're looking at, okay, maybe the weekly is really, really bearish and I can see it, right? Every time this plays into a what? It might make multiple imbalances. I'm going to trust the bearish imbalance over the bullish imbalance, okay? And I want you to do that because, again, does it make sense? You got to think to yourself, if price is going upwards and I know the weekly is bearish, should I just anticipate this going completely to the moon every time it runs up? No. No. And that's the thing, what we're doing here, right? And all I'm doing is marking 4 hour fair value gaps. Ooh. Jay, my man, you're all over the place. Why are you talking about the monthly? You just skip down to a weekly and you're saying the weekly is bearish. But why are you all over the 4 hour market fair value gaps there? We're getting there. I feel you. I feel you. We're getting there. Patience, my friend. But my overall point is, again, I'm bringing it back to this idea. Find your personality style. Are you more comfortable getting in and out of the marketplace intraday? Like, do you have a 9 to 5? Can you actually not participate at a certain time of day? Do you only have 1 hour to, really look at the chart, you know, see if you can find what's going on, You might be able to run a play maybe like after work, maybe PM session. Understandable. A lot of people do that. A lot of my students are in different places where, I'll send out signals in the morning, or I also have people who are working overnight, so they'll obviously be up with me and we'll trade overnight. So it really just depends on your personality style. Me personally, I like getting work done early. So I'll be up and trading London session. I'll be up also again at 8:30, looking at that time window of 8:30 to 11 a.m. I'm normally actually done in the marketplace for the day almost 9 times out of 10 around 12 to 12:30 p.m. New York time also. I meant to mention that. But my point is here, right? And guys, I also wanted to give you these two. I'm not sure if I mentioned these already. Weekend, Saturday, Sunday, and sessions. Everybody will always ask me like, yo, you say you don't use indicators, but you have these freaking lines all over the place. What is that? Remember, we talked about time. It's the most important thing in the market. All I'm doing is operating and knowing what day it is, what time it is. Okay. Week by week. This is all I need to know. So yellow to yellow is 1 week. This is another week. And you can see that I can see the 4 hour. It's clean on certain structure, right? So if this fair value gap pops up and I see that we've traded into that on my 4 hour chart, this is a 4 hour imbalance. I'm actually going to label this time frame specific. So if I turn these off really quick, we know that this is a 4 hour structure that I found on this exact time frame. Okay. This is going to make it so much easier for you to operate. You know exactly where you found this from. You're not going to be randomly in space and you're like, yo, okay, which imbalance am I going to focus on? Which ones got balanced already? You're going to look at so much data. We're not doing that. Okay. And you notice when I put on my time-based indicator, man, that is so annoying. Oh, Lord. Anyway, when you're looking at stuff like this, right? This 4 hour imbalance happened weeks ago and didn't get rebalanced till weeks later. Do you see what I mean? This is helpful for you. So now, are you expecting price to run above this significantly? When we start to trade into this area, you're expecting price to straight melt down from here. This is a significant imbalance that finally got rebalanced. Okay. This is a SIBI, right? Sell side imbalance, buy side inefficiency. And what are you going to do? Expect price to fail. You feel me? And then once it starts to fail, you're going to expect price to do what? Run for what? Liquidity. You see what I mean? Okay. Again, my personality style, I'm lazy. I learned how to swing trade because I like the intense moves. I also learned how to day trade because I'm trying to get some stuff done. Okay. So when I'm operating a 4 hour chart, or my favorite is actually the 1 hour, just because I can really get accurate with the structure that I like. But 4 hour chart and down is really just working within tighter spaces, working with the higher time frame bias to give myself a lower time frame confirmation, right? Okay. Stay with me now. All right, we almost done. I got plenty of battery. This is perfect. A lot of people would be like, yo, charge your iPad about to die. I'd be like, I have plenty of battery. Come on now. And so my thing is, right, I do want to talk short about the daily chart. Okay. Now, notice how we marked the bearish trend from our weekly chart. We saw how, again, after hours is the best to study this stuff. Seeing things in hindsight or already having the data there, you can go back and start to see this in the future. This stuff repeats itself, man. And again, don't take my word for it. The market is open right now. You can go and check this. The video is going to be uploaded. It's about 9 o'clock right now, Wednesday, August 2nd. The video will be up tonight. You can go in the market and find this. Okay. This is easy stuff. All right. And so my thing is here, this is what you're going to do. Again, look at the daily chart. What did I say? Imbalances here. Not all of them are going to be immediately rebalanced. Sometimes it's only the first one. Sometimes you'll see price want to run into the top one or the middle one. You'll see it. And so you have to be flexible like that and really get in there on a lower time frame and try to understand exactly where your top and bottom really might come from. Let's say if you're operating on liquidity, of course. And once we get through liquidity, you'll understand how to, oh snap, look at that. Oof, that's tough, right? When I point out stuff like this, again, a light bulb should go off in your head. A light bulb. Now, this is crazy, right? You have a sell-side imbalance, rebalance one time, boom. Came down, took out sell-side liquidity. Perfect trade. And that would be a nice either day or swing trade. You could have held this the entire time. Once we get back above that, right, we actually take out this high, back into an imbalance. Are you going to expect it to go that much higher? No. But also remember, what chart did you see this structure on? Daily chart. There you go. Now that's what you want to do, my friend. You want to operate like that. You feel me? And, oh man, I want to roll this other blunt in a second. But like, it's just annoying how like, I ain't gonna lie, man, backwoods are so addictive. And they're good. I mean, they're the best blunts on the planet, for sure. But yeah, it's okay. We'll just roll another blunt in a second. But this is my thing. Turtle soup into a fair value gap. Right into what? Sell side liquidity again. These are easy concepts that I'm giving you. And again, I want you to understand when you're operating like this, what's going off in my head is, and before I even say anything, somebody please point out that fair value gap as I break it down this next blunt. But when you're looking at this structure, what did I say about that weekly? It's going to start respecting sell side PD arrays. Ooh, what does that mean? Now, when I say PD arrays, right, certain things the algorithm will do or reference over and over and over and over again. And so when I talk about fair value gaps or order blocks or liquidity voids or things like that, things the algorithm will keep referring to, that's what you're going to identify as a PD array. Okay. And so when I'm looking to enter the marketplace or use something as a target, I want to use a really, really nice PD array. And right here would be a perfect entry for one that I would love to do. And again, when you see stuff like this, bro, I will bet the house on that. I'll bet the whole house on that one. And this is what I mean, where it's really comfortable to not just understand what I'm telling you, but seeing the phenomenon, going back testing it, and getting comfortable with not only do I see it, but I get comfortable participating in this type of structure. So you already should know that if you're back here, this runs above this old high, you should be selling this thing. And guess what? You can get in again, right? And again, when we get to order blocks in about a week and a half, that's what I have scheduled for you guys. Once you get to this section too, again, we're just using all concepts that I want you to, work from the last two videos. Look, even if you just ran all premium fair value gaps, understanding the higher time frame and where it's going to gravitate to, you can run these things all day, man. And look, every single time, what happens? Until what? Ah, exactly. And the thing about the daily chart, this is what I want to talk about. Pretty much, when you're on your weekly chart, you're mostly going to look for your swing trades. Okay. When you're on your daily chart, or your daily chart, you're going to sit there, and it's going to be like the probably the best time frame because it's hybrid. You could find really good setups that are going to work for long-term analysis, but still perfectly good for intraday if you don't really have that much patience, but you still want a really accurate model. You're also going to work within, let's say you don't feel comfortable with that and you want more time with your trade. You want to, deal with less volatility from point A to point B. It really just depends on the time of day that you participate and the actual day you're participating. You're really going to get used to Tuesday, Wednesday, and Thursdays, okay? And there's a certain motto that I like for Friday. We talked about TGIF a little bit, but I really want you to just get in there and work on yourself. If that's my biggest advice to you guys, work on yourself as you're in the chart. And I gave you guys a second. I'm not sure if you peeped it. Why I pointed to this candle. Now you see it. What happened? Daily chart. Switch the market structure. This fair value gap got formed. We traded up above, right? And again, significant low down here. If you guys want to really know how to actually catch these before the inbounds, oh, that's a really good lecture. That's going to be a fun one when we get there. But a big thing is, right, knowing that this whole bearish move is done. This sell side inbounds here, that gets created. But this daily chart is now bullish. It's going to run up. We get rebalanced a couple days later. And we start to run what? Highs. Right? And now, when other structure starts to come downward, it's going to do the opposite of this downward run. You feel me? Now, look at it backward, right? I want you to get comfortable with this. Jay, man, how do you hold so long when you want to get a position or a swing trade? You're going to see bullish order flow is going to start to respect these bullish PD arrays. And even if it does come down, I mean, downward, really rain down on you, right? You'd be like, damn, Jay, I thought you said it was bullish. It is. But you have to get used to understanding where price is going to gravitate to and why. It's all going to play into a narrative, my guy or girl. But my thing is, you have to get comfortable with this. And price is going to aggregate. It's never going to go up significantly one way. It's never going to go down significantly one way. And I mean, again, we could talk about displacements or, singular candles that might go from point A to point B. Cool. Those happen. But what I want you to do is understand, again, with these old, and I mean areas of consolidation or, even just, couple candles that form a high like that, or even these singular candles that produce a low. Liquidity is resting above and below these areas, man. It's going to be easy for you to operate visually, mentally, and for me, it becomes like muscle memory. So like I push the button almost like sometimes like, okay, I see something, I like it, let me participate. What time frame did I see this on, right? So if I'm on a daily chart, and let's tap into this fair value gap here. Let's get rid of all this. I want to focus on using your time frames. And the whole thing is, again, fair value gaps, time frame selection, knowing yourself. That's the 3 things that we've talked about so far. Okay, stay with me now, right? And this blunt not gonna be bad. I got some gas, man. You guys reminded me. Like, you really have to have fun out here, man. Because my thing is, like, trading is, and I get it. I mean, it's important. You don't want to take risks and you don't want to take losses and you want to make sure you have the right information. But again, the right information is nothing without trusting yourself, having faith in yourself, investing in yourself. You're going to take a couple of losses while you learn this. That's fine. But my thing is, you guys cannot be scared to get in the market, man. I mean, get on your demo, whatever, sit there and backtest this. All the stuff that I'm telling you to do, right? And I really want to focus on this for value gap. All the stuff that I'm telling you to do, ready, watch this. And you'll see how I typically operate when I'm charting with my students. So I'm like this, ready? Fair value gap, cool, found that on the daily. And I'm going to annotate just like that. 4-hour time frame. Now let's run it. Now look at this. Now, if you've actually identified that fair value gap before it got smacked again, right? Notice what you could have done. Ready? And now I could throw on this time-based indicator. Now, this is a fair value gap formed from the previous week. It runs up, right? Tuesday high. Wednesday gives low of the week. So, I'm going to annotate this. What color do you guys want to use? Let's do blue. And I'm going to run this as low of the week. Right? You can see why I said that. Like, it's literally the low of this week. Okay? And you're in a fair value gap. See what I mean? So, how do you play this? How do I want to participate? That's what I'm asking myself in this moment. Okay? I see price ran up way too fast. There was no time for sellers to participate. Buy side imbalance, sell side inefficiency, right? It almost sounds really cool also in like all scientific when you go and learn it and you want to like, teach other people about it, right? It sounds all scientific, but a simple fair value gap, right? Runs up, actually rebalances this one, runs back into this fair value gap again. Makes a higher low also. So if you get more comfortable with, older ideas that you might have started to use, you can still use those. Lower lows, higher highs, things like that. We still like that, right? But are you going to anticipate lower prices from here? Why would you? If we know that price is only coming down to rebalance this fair value gap, and again, you don't have to be completely sure, but I want you to try it. You feel me? Yo, you guys have no idea how the dog just scared the shit out of me. Oh my God. Rocky, what you doing? Scared the hell out of me. Dog just opened the door and like, oh, you just gonna go back out? Okay, yeah, do you. Oh, you came just for some water. Bet. Woof. My God, he scared me. Woof. Anyway, long story short, when you're looking at this, right, again, we're back on the 4-hour chart, right? So if you want to participate, I would just honestly, again, from the daily chart, knowing that that's king, I know that I could run this and these targets here, right, should get smacked. And what I want to do, right, I don't want to talk about liquidity, although I really want to right now. It'll be more helpful when we get to that section, but you can go back to this video once you get to my in the future liquidity stuff, and you're going to have such an understanding of why this is so significant. But my point is, you're going to take this fair value gap off the daily, refine it to your lower time frame. So whether you take a, daily fair value gap, but you don't want to risk the drawdown of that whole area, you feel me? what I want you to do, we're right here. Check this out. Now, those on this channel, if you're familiar with order blocks, you can start to dig in there like that off your hour time frame. Okay. I moved that one back. Or if you guys get more comfortable with, again, it's all about refining what you want to find. So go in this area and find that fair value gap. Search for it. You feel me? And that's going to be more significant for you. And even if you don't see one on your hour time frame or your, 30-minute time frame or whatever, you can go up or down or even just run that daily one if that's really comfortable for you. Okay? But at the same time, now look, ready? You don't even need to be directly down here. You could take the next imbalance if you miss that, or the next imbalance after that if you miss that. But you know that if price is going to be bullish in terms of order flow, that this is going to be very significant, and it's not just going to be these highs. A daily fair value gap is going to definitely have an effect. You feel what I'm saying? So this is more like a, okay, where am I going to target for short-term day trading? I'm going to target either or, even swing trading if you're a little lower. I'm going to run the first set of highs right here. Either I could take partial or full profits right here, right? You could do that for a day trading model. If you're looking for a nice little, and we're going to see how long this took, right? So when you're looking at this like that. Now look, that took a couple weeks to get to. So that's going to be a nice little swing trade right there, you feel me? But the result is monstrous. It's a monster trade. This is what I give you guys every time. Look. You are here. It's like, where's Waldo in the chart, right? Oh my God. Because when you sit there and look at it, and when you show your friends and all that shit too, right? Because I have a lot of students who be like, yo, like, I really want something to really take home to. I really want my family to know that I'm doing well with this. And like, I really want something to show for it. And I'm telling you, man, when you really start to attack the market like this, you really start to, what did I talk about? Knowing yourself. When you really start to know yourself, you'll have a lot to show for it. I'm telling you, man. This is a lot of money, man. That's a lot of money, man. And the thing is, you're not going to do this by accident. We're expecting price to run up here. That's what I'm telling you. That's why this is so incredible. I'm fried. That's why the tone of my voice is like that. That's so funny to me. I just love trading so much, man. But see, this is what I'm saying. When we get back on the daily chart, you see why all of this makes sense. And I've given you nothing but simple concepts. Fair value gap. It's going to run up. It's going to give you your first target. It's going to run down so you can participate. It's going to start to run up. Every bullish PD array, order block, fair value gap, liquidity void, sell side liquidity purge, it's all going to lead you to one location. Price is not doing that randomly, man. It's not. If you think it is, you're sadly mistaken. And look, it goes 10 times higher. 10 times higher. And where do you think price was headed? Ooh, come on now. Where do you think price was headed? I want you to think. That's what I'm saying, man. Remember what we talked about with fair value gaps. And does it paint outside the line? Sure. But is that not a good reference point to where, okay, I have an untagged fair value gap on this weekly. Same thing where this one got bounced, but this one didn't. Is it reasonable if price is trading? Oh wait, where we at? Where we at? Hold up. Yo, let's extend that. Let's extend that, right? Let's extend that. Let's just say you happen to get in the market and you happen to see this untagged, right? Are you going to be scared or, I mean, again, it's only your personality if you don't want to hold it that long. But if you could make a lot of money, man, going from point A to point B, and you had a good idea, it's going to go directly there. Price is going to draw to that area. Why wouldn't you try it? Even if it's the smallest position, why wouldn't you try it? And again, if you try it and succeed, you're going to be very happy, number one. But even if you say, damn, Jay, man, that really literally just like took a little bit too long. I mean, I had a couple different places I took profit along the way. And we'll get to that too. Systematically taking profits at all these points here. So that means when you get some of these lower retracements, right? Again, are you going to expect price to just dump to the complete basement, how we did on this bearish run here? No, man. Why is that? I have a higher time frame objective. My eyes are glued to these things, man. This is what I said before. Like, I'm a very processive person. I can run these easiest shit ideas all day. All day. And look, I want to take everything off screen. It's too much. But again, if I'm just giving you a basic framework, does all of this start to really, again, come together for you just a little bit? You feel me? But the biggest thing is here, time frame selection, okay? We talked about that. If you want to be a day trader, you're going to be operating daily chart and down. If you want to be a swing trader, you're going to really be operating from the weekly chart and looking to hold your position a little longer than, just a day, or I'll say a couple days, depending on those higher time frame targets. You feel me? And especially if we have like a weekly imbalance that I want to target, but I'm taking the trade on the 4 hour, that's completely logical. Okay. Your GBP. I want you guys to check this out. So when I went to it, right, I have a turtle soup setup that I found. And check this out. What do you think price is doing? It's bearish, right? Well, for sure, obviously. And I've had this in here for a while, right? So it's been a couple days now. And you see exactly how low price got. Ooh, right? But the thing is, I still got some lows down here. But am I anticipating it to go all the way down? I didn't need it to. But the only thing is, I wanted you to see how perfect this turtle soup setup was on a daily chart. Now, when I look into this area, right, let's go down the time frame and check it out. What do you see in here automatically? Huge displacement, price respecting these up close candles and drop. And then say, yo, well, what about this fair value gap? It's huge. Why wouldn't you run this to the upside? Remember what I told you. Fair value gaps, when we talk more about selecting and avoiding, this is what about pretty much like the narrative and having the whole picture being zoomed out and zooming back in. So knowing that price is bearish, again, what did I talk about? Daily turtle soup. So why am I looking for this imbalance to run me back upwards if I'm thinking that, okay, we just ran an old high, price I know is now bearish. Price is literally bearish once we run an old high. Price is literally bullish, we run a significant low. I'm telling you. Go back in the charts, Test me on that all day. If you don't believe it, go back on your charts. Because I'm running these motherfuckers all day. Okay? And this is what I mean. Selecting and avoiding is going to help you with this. You're not going to take the wrong Pediarite. All right? You're going to understand. Price is above this old high over here. Hold on. Let's really see what I mean. Price is significantly above that. I'm not looking for a significant run above this again. So once we start to dump downwards, and again, for our chart, we have a fair value gap, displacement downward, we start to run, right? Perfect. Now, once we start to get down here, what do we do again? Daily chart. But do you see, I have to keep switching my time frame back and forth. I need to see what happened. I need to see the structure overall. Do I still have lows somewhere? Yes. Now I got what? Fresh lows. You feel what I'm saying? It's simple. And me personally, I get comfortable with an iPad. I need to touch the screen. I need to draw things. I need to annotate. I need to run around. It's almost like a playground for me. You know what I mean? This is what again, it's my personality style. And as a mentor, I take it upon myself to be good at day trading, scalping, swing trading. But again, for you as my student or whatever, a teacher, you might have other students, right? I teach other mentors also. But the thing is, with any ICT concept, and this is why I love him so much, I give him credit every video. My thing is, he makes it so like all the concepts we use are fractal concepts. So you could use these on a smaller time frame. You could use these on a bigger time frame. But again, you want to reference the daily chart. You want to reference these higher time frames, even if you're not trading them. Does that make sense? So let's run that one more time. Let's, in a basic, little framework kind of way, reference the higher time frames for buys. It's going to help you with order flow. Understand where price is going to respect and where it's not. See where old highs are taken out or old lows are taken out on a higher time frame. See if fair value gaps are getting respected. And once we get to order blocks and liquidity, it's going to obviously paint a full picture and go full circle, right? That's what's going to make you into a better trader, and that's my job on this channel. And again, I'm lazy, man. I'm lazy. I don't even edit these videos. Y'all see how lazy I am. Yo, man. But this is my thing, right? You have to understand where price is going, or have a good idea. You don't have to be right 100% of the time, because I'm not right 100% of the time. But I am really good at understanding what price is telling me. It'll get to a point where you look at a chart and it's literally telling you something. It's not you trying to figure out a random up or down. We're done with that. We're completely done with that. We're not rookies no more, man. It's time to get in the market, Mamba mentality, and really get in these charts and rip it. Okay. A lot of new developments and stuff in the Discord. There's not too much going on right now. Okay, we got it. I did a little challenge last night. I don't know if you guys are interested. I actually took it upon myself to run, one of these little FTMO little challenge things yesterday. And honestly, I don't really trade funded challenges. I just did it because my students like them so much. I hope you guys pass them all the time, but like my thing is, you don't need to if you don't want to. I'll show you guys. I'll do a whole like video series on this, but like growing small accounts, how to really take a small account and rip that thing into a bigger account. That shit made me as a person, man. When I quit my job, I'm telling you, that was either like I had no choice. You feel me? When I tell you I've done this from the mud and I'm showing you how to do it too, it is completely possible. And I know it sounds cliche, but if I can do it, I'm telling you, you guys can do it. This is not hard. And so with this FTMO situation, you see I only got 2 days on here, but I started yesterday, August 1st at 3 p.m. New York time. I actually traded setups. I don't normally trade, but basically I beat the phase one in under 14 hours. A lot of people say they have trouble with funded challenges, and this is what I was telling you guys in previous video. You don't have to make this stuff difficult. It's based on how you get comfortable in the market, understand the stuff that I'm telling you, and run an easy model, man. And that's all I did. I used new day opening gaps, 1 minute fair value gaps, and I was just scalping. And you see, basically, I have an average loss of $0, 100% win rate, pretty much 140 trades, and the 10K challenge is $500 is the target goal, and I actually got the account to $606 just to make sure, and I ripped this thing in half in no time. And just so you guys can see, or again, try to test my accuracy, I've been trying to tell anybody on here, when I tell you guys we can go weeks and weeks without losing, it's not a joke. That is not me being funny. But this is how easy this is. Once you understand what the market is doing, you can do these types of things. If you guys feel like you need to take a week to pass the challenge, I can show you how to do that. But again, look at this. The 5% gain in under 14 hours. Funded challenge, phase one pass. Literally not a problem. And look, small profits make big profits. Ran this thing. Completely ran it. See what I'm saying? It's easy, man. I just wanted to try this little challenge, you feel me? But 100% win rate, dog. I don't know how else to explain the... I don't even know how else to say it. It becomes like a muscle memory. Like I said, I gave it to you very quickly. Old highs, old lows, understanding liquidity, going to your higher time frame, really getting a good sense of what it's going to do, and having a good idea of why, right? This is going to be probably the end of this one, but when we touch down for part 5, we will get into understanding really how to really take some examples and find yourself as a trader, okay? And we're going to really dive into liquidity. And the reason why I'm talking to you guys as if it's like it's a lecture. It's not like I'm getting on here and it's like, hey, learn this little thing. Okay, thanks, bye. No. I care about your development, and the way that I learned it is the way that I'm giving it to you. And the way that I break it down is going to be a lot, well, I'm not going to say easier, but it's going to be in a way that you can digest it, all right? Everything that we've talked about. Again, even if I want to switch this up. Old highs, old lows. Daily chart. Significant low get taken out. You want to be a what? Buyer. Where do you think price is going? Gee, this is really difficult. That's it, bro. That's it. What about that was difficult? Completely even reversed it on you. It was still easy. I don't know, man. If you guys have trouble with this, I mean, again, feel free to comment, like, subscribe. You don't even have to subscribe, bro. I really don't care. You can do what you want. I'm not that kind of YouTuber. I'm not one here to really get you to do anything, honestly. I appreciate you for even getting this far to listen, but yeah, you're gonna get this stuff down, man. And the reason why I'm thinking about it like this is because I'm thinking about my own journey and experience and how far I've come, and I know you guys can do it too. I know you guys can do it too. It took me forever to really see the easiest stuff in the market, man, and this is it. I'm not going to say trading is ever going to be simplified, but we're going to do really complex, hard shit in a very easy way. Bro, hard is just easy with extra steps, all right? I don't want you to go in thinking trading is oh, trading is so hard. It's not. Do not come in here with that mindset, all right? Trading is easy, all right? And we're going to treat it like it is. And we're just going to get used to what we're doing, routine everything, and we're going to have some fun and relax. You feel me? We're going to smoke some blunts and take some trades, all right? If you guys want help with anything, help with funded challenges too, I can also do that for you. So the Discord is still on sale for right now. If anybody still needs the link, just let me know. Okay. I'm gonna get some food and smoke this blunt. So I'll see you guys in a little bit. Love y'all. Oh shit. 10%.